October, you said, or you expected the taper in December. That's now pushed to March, right?
Yes, I mean, clearly we're looking for a substantial improvement in the labour market along the lines of what Janet Yellen was speaking about yesterday, and we feel that won't be in place till likely March. The ambiguities around January are just too much.
I've heard the quote that there's this worry that markets are on too much of a sugar high. Do you worry they're on too much of a sugar high?
I think there's a liquidity element to this, but the key issue here really, Alex, is that growth is improving. We expect the US economic momentum to pick up through the first half of next year, indeed globally. I mean, to a degree, Japan and Europe to accompany that. But certainly, clearly, as tapering begins, you will get an impact in markets, but it's likely to be from higher levels than currently.
You like equities and high yield in the US, I know, over Europe. What in particular on the equity side you like?
Well, on the equity side, in terms of the stories, in terms of regions, we're still very much banking on the US as our core commitment there. The best risk-reward offering, solid earnings growth, a healthful central bank, treasury yields rising but only in a limited fashion, and valuations not being pressured. We've rotated into Eurozone recently on the basis of, again, the cyclical improvement, moving out of more defensive markets, trying to capture something in terms of the potential upside of an earnings revival in Europe coming through in 2014. And again, valuations to us look reasonable.
Did the numbers yesterday concern you, the growth numbers?
No, I mean, I think we always expected a very pallid recovery. There is no prospect here of a significant credit cycle, and indeed, there is no domestic growth dynamic in Europe. We are still dealing with a highly disinflationary environment in Europe. But nevertheless, in terms of the listed sector, there is enough there. Earnings have lagged significantly relative to the US. We're likely to get some fill-up in terms of actually corporate earnings reports as we go through into 2014. But nobody expects a dramatic economic revival from Europe. Indeed, on balance, we think the risk is that the ECB may have to provide further support.